For our larger grant, for SAH, what we're typically looking at is to try to improve access and mobility. So first, we're trying to make sure that veterans have ingress and egress. So sidewalks, ramps, lifts, how do we get in and out of the house? We also want to make sure that the veteran has proper sanitary facilities, so we do a lot of bathroom adaptations. Over and above that, we want to make sure that whatever areas of the house the veteran wants access to for their specific needs and wants, we can try to accommodate that. For the Special Housing Adaptation Program, our smaller grant, for visual impairment we see a lot of things in the area of fluorescent lighting and eliminating tripping hazards. And for loss or loss of use of the hands, special switches to turn on lights and open doors are some typical adaptations that we see. Who is eligible for the SAH grant program? Eligibility is determined first by the Veterans Service Center, so everyone needs to have their eligibility determined first and foremost. But generally speaking, veterans must be 100% service-connected for certain specific disabilities. For our larger grant, which is the Specially Adapted Housing, or SAH grant, we're usually talking about disabilities surrounding loss or loss of use of the lower extremities. There are some other scenarios that could potentially make a veteran eligible, but that's typically what will involve eligibility. For our smaller grant, which is Special Housing Adaptations, or SHA, generally the eligibility criteria involve severe visual impairment or loss of use of both hands. Do I have to own the home to qualify? For the bigger grant, ownership is a requirement. So the veteran does have to have an acceptable ownership interest in the property, but it is important to note that the veteran doesn't have to be the only owner of the property. The veteran can be a joint owner with a family member, a friend, or someone else and still take advantage of the program. For the smaller grant, the veteran does not have to have an ownership interest. But a family member does. The VA loan, special programs. Cash-out refinancing. The VA's cash-out refinance loan is for homeowners who want to tap into their home equity for debt consolidation purposes, tuition, or home improvements. It can also be used to refinance a non-VA loan into a VA loan. Lenders can make loans up to 100% of the value of the home. Because the loan amount can exceed the current balance on the original VA loan, the borrower must go through the qualifying process again, including submission of a COE, income verification, and an appraisal with a new certificate of reasonable value. Interest Rate Reduction Refinance, IRRR. This loan program is similar to the FHA Streamline program. It allows refinancing of a VA loan in order to obtain a lower interest rate. The amount of the loan cannot be more than the outstanding balance of the loan to be refinanced, other than the amount of any closing costs that are refinanced. A 0.5% funding fee applies, but there are no requirements to submit a COE, no new appraisal, and no income or employment verification. Native American Direct Loan Program, NADL. Established in 1992, the Native American Direct Loan provides direct home loans from the VA to eligible Native American veterans to finance the purchase, construction, or improvement of homes on federal trust land, or to refinance a prior NADL to reduce the interest rate. The NADL program is a great option for Native American veterans living on tribal land, which is land owned by the federal government and held in trust for certain tribes. Of course, the regular VA home loan program is available to Native American veterans, as it is to other veterans. The NADL program, however, assists Native American veterans who are unable to find a lender willing to make a regular VA home loan due to a property's location on tribal land and the unique issues this creates. The NADL program is different from the traditional VA home loan because the VA is actually making the loan. In the traditional home loan program, lenders make the loans, and the VA provides the guarantee. But here, VA is actually lending the money to Native American veterans living on tribal land. Veterans are eligible for the NADL program if they meet the eligibility criteria for the VA home loan program and if their tribe has a valid agreement with the VA to offer this program. Specially Adapted Housing. The VA provides two types of housing grants to active armed service members and veterans who have permanent and total service-connected disabilities. The grants must be used to modify the veteran's home to accommodate the disability. The Specially Adapted Housing, SAH, grant can be used to build a specially adapted home on land to be acquired, Build a home on already owned land, if it's suitable for specially adapted housing. Remodel an existing home to accommodate a disability. Pay the unpaid principal mortgage balance of an adapted home already acquired without the assistance of a VA grant. The maximum dollar amount allowable for SAH grants in fiscal year 2016 is $73,768. The Special Housing Adaptation (SHA) grant, which is smaller, may be used to adapt an existing home in which the veteran resides that is owned by either the veteran or a family member. Adapt a home the veteran or family member intends to purchase in which the veteran will live. Help a veteran purchase a home already adapted in which the veteran will live. The maximum dollar amount allowable for SHA grant in fiscal year 2016 is $14,754. Government loans. Study sheet. FHA. FHA goals. Improve housing construction standards. Develop lending standards. Stabilize and improve the mortgage market by insuring mortgages. FHA contributions to mortgage finance. Created the long-term amortized loan. Developed construction standards. Implemented borrower qualifying standards for mortgage loans. Requires licensing of appraisers for FHA loans. Creates opportunities in the global market for mortgage-backed securities. FHA loan programs. Title I, Property Improvements, Loan Insurance for Moderate Rehabilitation of Properties Without a Purchase Mortgage or Refinance. Title I, Purchase of Manufactured Housing, Loan Insurance for Purchase of a Manufactured House on a Developed Lot, to develop a lot for a manufactured home, or both. Title II Programs. Section 203, the purchase of 1 to 4 family homes. Section 203, H. Victims of disasters may receive 100% financing to reconstruct or replace a damaged home if they file within 1 year of the disaster. Section 203, N. Purchase of a unit in a cooperative housing project. Section 221, D.3, and, for construction of multifamily rental or cooperative projects. Section 223, E. Purchase or rehabilitation of a home in an older, declining urban area. Section 234, C. Purchase of a single condo unit. Section 251, Loan Insurance for Adjustable Rate Mortgages. Section 255, Loan Insurance for Reverse Mortgages for borrowers age 62 or older. FHA Special Programs. Energy Efficient Mortgage, EEM. Streamline Refinance. Home Equity Conversion Mortgage, HECM. Good Neighbor Next Door. Homeownership Voucher Assistance. Programs for Native Americans, FHA Section 248 and HUD Section 184. Disaster Relief. FHA Loan Requirements. Minimum down payment, 3.5%. Payment of upfront MIP at closing. May be financed into the loan or paid by seller. Payment of annual MIP over life of loan. Adjusted annually and paid monthly. Removal requires payoff of loan or refinance to conventional loan. Borrower income and credit qualifications. Housing ratio, 31%. Total debt obligation, 43%. Credit score, at least 500, higher down payment, or 580, to secure 3.5% down payment, 620 preferred. Loan limits based on property type and median price for area. FHA loan options. Buyer or seller may buy down interest rate. Seller may pay up to 6% of buyer's closing costs. Second mortgage may be allowed. Assumptions are allowed if new borrower meets credit requirements and occupies property. VA. VA loan benefits. No down payment required. Competitive interest rates. No mortgage insurance, though funding fee may be required. Low closing costs. No prepayment penalty. VA works to assist borrowers having trouble making payments. VA loan eligibility. Requires valid Certificate of Eligibility, COE. States eligibility for VA loan and dollar amount of entitlement available. Veterans eligibility based on length of service or service commitment. Duty status. Character of service. Reserves, National Guard, and surviving spouses may be eligible. Applicant must also have sufficient income and credit. VA loan requirements. Qualifying calculations. Residual income according to family size, region, and loan amount. Debt to income less than or equal to 41%. No specific credit score requirement. Lender allowed to use compensating factors to qualify a borrower. Most loans require the borrower to pay a funding fee. Used by VA to cover expenses in case of default. Fee may be paid in cash or included in loan amount. Some veterans are exempt. Amount varies and depends on down payment amount, first or second VA loan, military status, certificate of reasonable value, CRV, required. VA assigned appraiser creates the CRV. VA will not guarantee loan amount above CRV. Seller concessions can't exceed 4% of sale price. Buyer or seller may buy down interest rate. VA loan options. Loans may be assumed by veteran or non-veteran buyers. When the new borrower is also a veteran, a substitution of entitlement can be used, creates a novation. Otherwise, the veteran should obtain a release of liability from the new borrower. Second mortgages are allowed under certain conditions. VA loan special programs. Cash out refinancing. Interest rate reduction refinance. Native American direct loan. Grants for adapted housing. Specially adapted housing. Special housing adaptation.